Hello, this is Casey Stubbs from Winner's Edge Trading, and today I wanted to share a new trading strategy with you. Well, it's not actually new, but it's a new video, and people were asking me how to trade this strategy. As a matter of fact, I've had this strategy on my website for a long time, and one member recently came to me and shared with me that they had made a lot of money trading this strategy. And so I thought, you know what, I might as well share it with the rest of the readers and give you guys a video on how to use it. So it's a trend strategy, and it's used to let your trades run long term, and if you follow this, you should do very well. So let's go ahead and get started. Okay, first thing, capital preservation is very important. I always protect my account because once it is gone, trading is over. Just want to re-emphasize how important that is. It does not matter how large the account is. If I risk too much, it can be wiped out before you realize it. So always use risk management. That's my disclaimer, always. So for this particular strategy, we're going to say 1% on the total of all trades. And so there will be 3 positions. So through those 3 positions, you'll want to do a 1% total. Not 1% on each position, but 1% for all 3. And the way you can calculate your risk is we have a risk calculator on winnersedgetrading.com. It's Forex Tools, the tab. Click Forex Tools and go to Risk Calculator. Okay, so we're trying to get a 1 to 3 risk to reward ratios. We try to let our winners run and cut our losers short. That's how this works. So to get this set up, you'll use a 3 EMA, a 30 EMA, and a 25 EMA. And an EMA is an exponential moving average. It should be available on any charting platform. When the 3 EMA crosses above or below the 30, that is when you enter. Wait until the candle closes. Open 3 lots with a stop just above the high on the 2-hour candle before the candle that you enter on. Adjust stops as the trade moves in your favor. You'll also use a MACD on this strategy. Use a MACD with a 12, 26, and 9 settings. The purpose of the MACD is to exit trades. When the lines on the MACD cross after you enter, that is when you exit 2 lots to take profit. Keep the 3rd lot open to let the profits go on for more. Okay, so let me go ahead and show you the screen now of what the charts will look like. Alright, so now we're looking at the actual charts and the EMAs that we were talking about. This is a 4-hour candle, and this is a 3. The light blue is the 3 EMA. The green is the 30, and the red is the 25. And the way that we determine an entry is when the blue EMA, which is the 3, crosses below the 25 and the 30. At that point, we enter the trade. Okay, so for this particular entry, the blue crosses below, and we would put our entry in at the close of this candle, and you could see that the entry would be right there. And we would put our stop loss above the candle, or above, well, that's the wrong candle, excuse me, above the entry candle. So our stop loss would be right there. So that's a relatively tight stop. 135.40 is the entry, 135.84 is the stop. And you can see that this trade ran down quite a bit. It bounced back and then it ran down again. And of course, once you get up, a certain amount, you can move your stop to break even if you desire to do so. And the way that the MACD is used is for closing your trades. So for this particular example, our entry would be right here, and we would be watching the MACD. And when the MACD crosses, which there it is, you can see the cross. Let me add a line just so it's clear. Right there is the cross of the MACD. Right there. So your exit would be, you know, somewhere around here, maybe at the top of this blue candle, 132.66. So your exit would be right here, and your total profit on this trade would be about 300 pips, 280 pips. And at the point of this cross, you would still have one position open since you opened 3. So the third position would be open to be left open as a runner. You could leave your stop at break even, and then if it ran down here to 131, you could capture some more pips if that was what you wanted to do. And sometimes the third position will run much farther. Now, not every trade is a winner. However, the way that this system will benefit you over the long term is by the bigger wins that you'll get versus the shorter losses. For example, this here was a very strong break to the top. We got a breakout, and the would have been a long trade. However, it did not work. This would have been a trade where you would have been losing money. But over the long term, your winners are going to be much longer than your losers. So let's take a look at another example on another chart. So here's the euro dollar, and this is very recent when the euro just started its downturn. You can see the entry was right here. This particular trade, we would have exited the first position. Where would we have exited? Right there is where we would have exited the first position, around 143. The entry would have been 147. That was a 400 pip trade. And then if you would have allowed your third, you closed 2 positions on your cross, your MACD cross, we could have allowed it to go all the way down even further. And you can see here there's also another entry would have occurred right here as well. This one would have been at 142.50. You could have gone all the way down to 143 to get some good profit there. Actually, you'd still have your cross occurred around 141, so that one would have been about 150 pips. But you can see that this system gives you very good entries, and it gives you long-term trades with a minimum amount of losses. So I recommend that you try it out, run it on back testing, and see how everything works out for you. Keep your risk at a good level, and if you're consistent and you follow it over time, this should give you very nice return on investment. If you have any questions about this strategy, please don't hesitate to contact me. Thank you.